All right, let's talk about something that's on a lot of people's minds. Can you really turn $100 into a million? I know, it sounds a little bit like a fairy tale, right? But today, we're going to cut through all the noise and look at the real, no-hype path to actually building wealth in the US stock market. And just so we're clear, this isn't about some get-rich-quick thing. It's a marathon, and we're going to show you exactly how to pace yourself.
You know the feeling, right? You look at a $100 bill and you think, okay, that's a nice dinner, maybe a couple of movie tickets, but it's not life-changing money. And then you see all these crazy headlines about overnight millionaires, and it's easy to feel like you need this massive pile of cash just to even get in the game. But what if that whole idea is just wrong?
And that's really the heart of what we're going to talk about today. Because the real power, the real secret sauce, isn't about how much money you start with. It's all about the habits you build along the way. We're talking about discipline, patience, and just plain old consistency. Those are the actual building blocks of wealth.
Okay, so let's get into the reality of it. Before we even dive into the how, we've got to get our mindset right. And it's simple. Building real wealth is a marathon. It is not a sprint. It's all about a big mental shift, away from chasing those quick, flashy wins and towards something much more sustainable, long-term growth.
And let me be super clear about this. There are no shortcuts here. We're not talking about gambling on some hot tip or trying to ride the latest meme stock wave. This has nothing to do with overnight success stories. What we're talking about is a proven, kind of boring, but incredibly powerful process that's been working for generations. It's all about discipline, not drama.
So, where do you even begin? Right here with your very first $100. Think of it as the foundation stone for your entire financial future. The goal here isn't to knock it out of the park on your first try. Nope, it's just about getting in the game and starting to learn the rules.
Okay, one of the absolute best places for a beginner to start is something called an index fund. The easiest way to think about it is like this. Trying to pick winning individual stocks is like searching for a needle in a haystack. Well, an index fund just lets you buy the entire haystack. So, for instance, an S&P 500 index fund buys you a tiny slice of 500 of the largest companies in America. Boom, you get instant diversification. And all that really means is you're not betting everything on a single company.
Now, you'll also hear about ETFs, which stands for Exchange Traded Fund. They're really similar. A lot of ETFs actually are index funds. The main difference is just how they're traded. You can buy and sell an ETF anytime the market is open, just like a regular stock. This makes them incredibly easy and accessible for anyone just getting started.
And this brings up a really important point. What we're talking about here is investing, not trading. They are two totally different things. Trading is all about short-term bets, trying to guess which way a stock will move tomorrow or next week. It's high stress. Investing, that's the long game. It's about owning a piece of great businesses, or hey, a piece of the whole market, and just letting it grow over years and years. When it comes to building actual wealth, investing is the path.
All right, so you've put your first $100 in. Seriously? That is a huge step. Give yourself a pat on the back. But now comes the most critical part of the whole journey. We have to turn that one action into a consistent, automatic habit. This is where the real momentum starts to build.
And there's a super simple but incredibly powerful system you can put in place. It's just 3 steps. First, set up and auto-invest. Have a certain amount automatically pulled from your account and invested every single month. This is awesome because you end up buying more shares when prices are low and fewer when they're high, without even thinking. Second, reinvest all your dividends. Whatever your investments earn, just roll it right back in to buy more shares. It's like a snowball rolling downhill. And third, and this is maybe the hardest part, ignore the noise. The news will scream, the market will jump around. Your job is to stay calm and stick to the plan.
Look, whatever you do, please don't fall into the trap of thinking you can time the market. Oh, I'll just wait for it to drop and then I'll buy in. It's a fool's game. Even the top professionals on Wall Street can't do it consistently. Your real superpower isn't a crystal ball, it's consistency. Just investing that same amount month in and month out takes all the emotion and guesswork out of it. And over time, that simple discipline adds up to something incredible.
Okay, now we get to the part that feels like actual magic. It's called compounding. This is the whole reason we're doing this. After you've been investing consistently for a while, your money starts to make its own money. It's this quiet, powerful force that just multiplies everything over time.
So let's look at how this plays out. For the first few years, honestly, it might feel a little slow. You're just stacking up your contributions. But then, as time goes on, something amazing starts to happen. You can see that curve start to bend upwards. The growth starts to accelerate. That's compounding kicking in. It's not just your money growing anymore, it's the earnings on your money that are now generating their own earnings.
It's that snowball effect, and it gets bigger and bigger and faster the longer it goes.
So if you take one thing away from all this, let it be this. The most powerful ingredient in this whole recipe isn't how much money you have or your ability to pick the perfect stock. It's time. Just time. The longer your money is in the market, the more time it has for that compounding magic to work. It's always about time in the market, not timing the market.
Now, as you keep on this path and your account starts to grow into something substantial, your whole mindset has to shift. It's a natural evolution. You're not just playing offense anymore, focused only on growth. You have to start playing defense too. It becomes just as much about protecting what you've built.
So your strategy is going to change. When you're young, you're all about growth, growth, growth. But as that number gets bigger, your focus naturally shifts toward risk management and preservation. Why? Well, because you've got more to lose. So you'll make sure you're properly diversified, and you'll lean on that emotional discipline you've spent years building so you don't panic and sell at the worst possible time.
So, after years, maybe even decades of just sticking to the plan, of being disciplined, being patient, being consistent, following that automatic system through all the market's ups and downs, you're eventually going to cross a pretty amazing milestone.
And you know what? When you finally see that number, it's not going to be like winning the lottery. There won't be confetti and flashing lights. It'll just be quiet. A calm, satisfying result of a process you started a long, long time ago. The number itself isn't really the prize, it's just proof that the system worked.
Because at the end of the day, that $1 million figure is just a number on a screen. The real wealth, the thing you've truly built, is the discipline, the patience, that long-term perspective. Those are the habits that are going to serve you for the rest of your life, long after the numbers on the screen change.
So look, the path from $100 to $1 million, it's not a secret and it's not a shortcut. It's a journey. But the beautiful thing is, it's a journey that's open to absolutely anyone who's willing to just start small, stay consistent, and think long-term. You know that old saying, the best time to plant a tree was 20 years ago? Well, the second best time is right now.